Hey guys, it's Keith Allen. Oh man, what a day. Oh, before this day gets completely away from me, I wanted to bang one of these out for you. Twitter is a mess. Can't connect to that. Don't even know where this is going. Well, it will be on YouTube and live chat is open. Sorry for the delay, guys. I know I had this thing prepped up and ready to go and then had to run out for a minute. So anyhow, we are here. And yes, the subject is Bitcoin trading at macro support. Are we going to buy in or are we going to bail out? Well, let's make sense of it all, right? We have obviously been watching price just absolutely erode here through the past several days. We have clear signs of it happening on fire charts, and we have obviously seen TradFi suffer a similar price action here this week. It's only Monday, right? And TradFi is also looking horrible. So a little bit has transpired since I first got this stream set and ready to go about an hour or two ago, and so we're going to look at the charts and make sense of it here. And I want to start here on fire charts because I have that up, and you can and I just want to show you how we can spot these trends developing in advance by looking at order book liquidity. It is actually clear as day. So without further ado, we're going to climb in and share some charts. If you haven't done so yet, do me a favor, smash all the buttons, help me grow the channel. You know how it works. And of course, live chat is open. Would love to have you join me. I always enjoy engaging with you guys. Oh, Alex has been waiting in the wings. And Alex, buy the dip. Well, wink, wink. I did. And I'll tell you why. But I'll also tell you why I did cautiously. Okay. So I'm not all in at this point, but certainly building my position because I like the levels that we're at. Do I want to see more buying? Absolutely, I do. Is there a chance we see more downside? Absolutely, there is. But I'm going to show you what looks good to me and what doesn't look good to me. You do with that information as you wish. So let's, as I said, start on fire charts. And share screen. Let's go with this one. And you can see it here just as clear as day, right? This started here over the weekend on yesterday, right? We had a $83 million block of ask liquidity show up and then start stair-stepping down. We saw ladders of it, right? This was what turned into 77 million at this level, another 27 million at this level, another 23 million. So, somewhere in the $125 million range stretched out through this range. They stepped up a little bit. We saw price move up with it. And then we just saw this progressive stair stepping down, suppressing price down into a ladder of bid liquidity. Now, technically, there are some reasons why I expected this to happen. And for that, we're going to go over to the candle chart and take a look at just how things have been setting up here. Okay. Yes, trend precognition did point the way all the way. We get that. I'm going to get this out of the way so we can just really focus on the technicals here. We had this degradation. We have this CME gap here. There's a lot of, I don't know, people ask me, why do you still care about the CME gap? It's old. I'm not a gap trader. I've said that, but I like this gap because of the fact that it was lingering right around the macro trend line. And what was odd to me was, what was this? End of February. This was on the last day of the month, actually, monthly close. We wicked all the way down, almost to the trend line, almost to completely close that gap, and it didn't close. And I felt like if we're going to go down this far, then that gap should get closed. And obviously, there was a nice recovery here. This was a bit of the Trump pump and dump. And then we had news this past Friday of the, crypto digital reserve, et cetera, some mixed emotions on that whole thing, and price degraded. Long term, it's still a positive thing for Bitcoin. No doubt about it in my mind. But this uncertainty here, this is all, in my opinion, based around the FUD that the Trump administration is creating with tariffs on and tariffs off and tariffs on and tariffs off and adjustments to tariffs, and whether these are actually going to be long-term forever or whether they're just a negotiating tactic. I personally feel like it's a negotiating tactic. Some of it may stay, some of it may change. But this is a self-inflicted wound. And I think it's inflicted with some intent. What do I mean by that? I mean that Trump has declared even before he took office that he wants the Fed to cut rates. And since Fed Chair Powell won't just do what he asks as he asks, Fed Chair Powell is going to work off the data, not off of what the executive branch tells him to do. The Fed works autonomously of that. But the Trump administration also knows that the way to trigger the mechanisms that the Fed needs to see to put things in place is to perhaps spike unemployment, to put some pressure on the markets and the economy, maybe flirt with recession, maybe flirt with an increase in inflation again. And so this is having that kind of effect. So will that get us to a rate cut here at the next FOMC meeting coming up later this month? That's only a week away. Probably not. But it could mean one is coming up in second quarter, potentially second or third quarter. So there's that. But let's look at the technicals here. Okay. So today we saw price drop. Not only, we flirted with the 200-day moving average and ripped through it. All right. A couple of times. This is not, on a short-term horizon, not a good thing to see. But I felt like as long as this little sliver of gap was unfilled, that at some point we would come and get it. And that's been done now. So now that that's been done, can price go up? Well, it could. It should. Doesn't mean it will. And if it doesn't, what would be next? Well, as you can see, I have an RS flip line here at this, high 75, 76K level because of the brief amount of consolidation that we had here. And that is a viable target. And the reason that is very interesting to me isn't just because we had a little bit of consolidation. I mean, that's not really enough to hold on to much, but it would do, it would do something that I'm going to show you in a second. It does make this look like more of a symmetrical retrace. And quite frankly, if we took it all the way down to the 2021 top, that would really be a retrace of the Trump pump, because guess when this all started? Guess when we actually finally broke this level? This was election day. This was, without a doubt, the Trump pump. So we could conceivably retrace this all the way down. This would shake, losing this level. Losing this has already triggered some algos, right? Losing this level would shake more people out, and getting down to this level and a wick past it would shake out even more. And so, do I want to see that happen? Not necessarily. If it does happen, I'd like to see it happen quick and recover quick. And I'll tell you why. We're going to go over to another chart here. And this is a level that I've shared with you guys on a couple of occasions. If you haven't seen it before, pay attention to this one, because this is in my opinion, this is the line in the sand. Where is it? Here we go. Now, on the weeklies, things look a little bit better here, right? We don't have any of the moving averages crossed yet. So this looks better from this standpoint. But look down here on the RSI. You see this line down here? Every time price has dipped below that level, we have been in a confirmed downtrend or bear market, if you will. And the upside of that is, even though there's dips, are also, happen in bull markets. Okay. So let's look at some of these levels here. All right. You can see back in 2011, clear dip and price eroding, right? That this was bear market territory. It took until we bottomed in oversold territory, or nearly, broke through to clearly oversold territory. We saw a recovery, and then back to the bull. We have flirted with it many times, but these have been in, maybe developing trends, right? So it recovered from this, bounced back, and then you can see broke down. Here's a fake out on a breakout that did not materialize. It actually turned into more consolidation, and we could see something like this develop here in the coming days, weeks, months. And that's something to be mindful of. This ended up being a good consolidation level. Let's move on through history. This is now 2015. A little bit of consolidation, flirted with that level, and then boom, out the top. Let's now move on to 2018. Dipped down, flirted with it, recovered, had a nice recovery here, and then came back, consolidated, and dumped through. So this is obviously not what anybody wants to see. This is a much bigger breakdown. And then on the way out, boom, that's where you go. So if you're looking at this level, I have this marked at around 41.5 on the RSI, on the weekly RSI. This is important. It's a weekly RSI thing. And so you would not want to buy when price breaks down. You want to buy the recovery. And the confirmed recovery is when price breaks back up above that level. So yes, you could, if you want to snipe the absolute bottom, there's other things to look at. And here, the 200-week moving average had paid off at this point back in 2018. But that doesn't always happen because, as you can see here, we broke that after a breakdown in 2022, right? This was still bull market here, right? This was our mid-cycle top, and this may be akin to what we're building right now, right? We may be seeing this breakdown here, and notice the 50-week moving average coming into play. We could see this something like this happen, and notice how price actually held up above this 41 level, and then recovered into the new all-time high, which was a 69K 2021 top that we just talked about. And then again, you see the breakdowns, and once you lose this, it's over. And so that's what I'm watching for right now, a retest of support here at this 50-week moving average, which is right around 75.7, 75.6, something like that. And this is going to change every day, 75.5 actually. So where does this sit? Let's go back to our first chart and notice that we have some confluence with this range. Okay. I have a line here at 76, 75.9, whatever, close enough to the pin. And so that's right here in this range. And so this is very, very possible that we come down to this range and recover from here. And that would be textbook. If you're looking at this RSI situation that I just spelled out, that I just illustrated for you, this would be a textbook spot to do it, because this would take the RSI right down, and we're very, very close at this point, right? We are at what? 43.24. My line is at 41.5. So at least we've come off of this free fall nosedive trajectory. I'm fine with going down to that 75, 76K level and bouncing from here. Now, something you need to be mindful of is, because we're dealing with this on a weekly, just a wick through this is not worth, not something to panic or necessarily even react on. It's where it closes. So we could flush all the way down. Quite frankly, price could flush all the way down to this 2021 top and still close back above this level on the weekly. And potentially that's a setup for a fantastic V-shaped recovery. What is not good is this trajectory with the 21-day moving average headed for a death cross on the 200-day moving average. This is not what anybody wants to see. We want to see this start to recover, and this may be inevitable, right? This is already happening on a steep enough decline that it may not be avoidable. In another week or two, we could be there. But if we start getting candles like this, these big giant, 9 or 10% candles, a God candle, if you will, to pull us out of this nosedive, that would be promising. So that would really, point to a potential V-shaped recovery coming off of something like this. So that's what I'm watching. The fact that this gap has now been closed literally takes it off the table for me. And it is a worthy place to bounce. Now, if we look at liquidity in the order book, we can see we are seeing a short-term bounce here, a short hop here. But what is happening overhead? Right? We're not seeing a lot of volume here come out of large order classes at all, hardly anything. And so this is very thin up here, relatively speaking. It should be easy to move up to this. But you see the suppression is still happening. So they're still pushing this down. And TradFi is, almost closed for the day. By the way, they're having a brutal day today in TradFi. Bitcoin is down 2%. The S&P is down 2.7%. That's 156 points. Dow Jones is down 900 points. They were down, I think, over 1,000 points at one point in time today. So these are big downside moves for TradFi. So keep that in mind. They're sweating it too, and I think it all points to the fact that the administration is creating this uncomfortable situation in the market. The economy has been fine, but an economy that's now going to, potentially get slapped with longer term tariffs, for example, on energy from Canada, that doesn't affect us all, but it affects people in New York and Michigan and other places that are getting power or getting energy from Canada. And so, yes, there are other products that will affect us all. Lumber, for example, we import a lot of lumber from Canada, and Canadian whiskey, if you're a fan of Canadian whiskey, and things of that nature. So I think a lot of aluminum also comes from Canada as well. So those are the kinds of things that will have the broader impact on the economy and market. But in my opinion, this is very much a self-inflicted wound from the administration, and they're prepared to do it. They've told us they're prepared to do it. They're prepared for a little bit of pain. And they've also told us that this is, part of negotiating. So we'll see where it all settles when it's all said and done. But for me, these key levels are levels that I have been watching for a long time, and I couldn't resist adding a little bit. I've sold some up here. I've sold some on the breakdowns, and I wanted to buy back in cheaper. So I am trying to improve on my average entry long term. So we'll see how that shapes up when it's all said and done. Do I have some of these positions that are not in a desirable place right now? Yes, I do. But my net is still sub 50K. So overall, I'm in a good place, and I don't think that we're going to go even if we break down below or to this 69K level. I'm not ready to have the conversation about going down to that level yet. That'll be something we'll consider if this gets exploited. But at that point, I would be looking down to this double bottom territory. But that's still in the green for me. So I think I think I'm in a good spot when it's all said and done. At the end of the day, I'm trying to stack more Bitcoin for the long game. And with that, guys, I'm going to wrap it. If there's anything else, any questions you got or anything else you want to do, I don't know that X is back online yet, but you can comment on YouTube and I will respond there, of course. And we will revisit this again tomorrow, see how things are looking. Hope that gives you a little bit of insight, maybe a little bit of confidence in the market, although this is pretty difficult to be confident in at this stage. But remember, it's never good when, it's never comfortable to watch price go to test the lows and watch your portfolio balance degrade with it is not a comfortable thing to see. Lucas is asking, what are my thoughts on Ethereum? My thoughts are Ethereum is not in a good way. It's a shit coin, and it is headed to the toilet right now. It just lost a key level. Not just the 0.5 fib, but it lost the $2,000 mark and now it's probably going to 1500, maybe even this 1389. I think my next line on it is about 1500, which would be right about here. So yeah, ETH has never looked worse. Well, I say never. I don't look at it that much. ETH looks shitty right now, no doubt about it. So be mindful of that. You know, they're going to put some ETH in the new crypto reserve for whatever that's worth, but I don't know that they'll be buying any. Hope that answers your question, Lucas. I am not the ETH maxi that you were hoping for, probably. Sorry about that. I just call them how I see them. Looks scary. And with that, I'll leave you with a parting shot of the order book and fire charts. You see this yellow class buying robustly. How much have they actually spent here, real quick? You know, do you think this is retail, or do you think that this is institutions using these small orders to minimize the slippage? Let's see. If we switch this over to absolute CVD, we can see that they went from about $267,000 up to, okay, so 2 million. That's not that ain't a lot of money. How long ago was this? 1850. Okay, so in about an hour and a half or so. So not seeing enough volume here to get excited about from any class, including this. This looks like that has some impressions of a TWAP bot, but this selling and starting and stopping, not so much. So not confident calling this a TWAP bot just yet. I would continue to watch and see if we get something more prolonged out of this with more volume than we're seeing here. But remember, when there's low volume in the order book, and since this has all been cleared out, there's not a lot there. So when it's low volume in the order book, it takes very little to move back up. So you can't make the big orders without having too much slippage. So that's why whales and sharks will start using these smaller classes to start buying incrementally until they get into pockets of liquidity where they can make larger orders. So this suppression, I don't like. I'll be honest with you. This points towards more downside, at least maybe pushing it down towards that 75, 76K level we talked about. There's only about 32 million sitting there at 75K. Another 23 behind that stacks it up a little bit, but and that's insulated by a little bit up above. So good to see this developing here, but we want to see more. We need to see the kind of volume we have up here to make that really look good. The fact that we're starting to get these concentrations here is a positive sign, but the fact that these are still stair-stepping down, not good. It makes me think that they really want to force that 75, 76K issue before they take their boot off the neck of the market. Somewhere in Hawaii. Thanks for the comment. Hope you're enjoying yourself somewhere in Hawaii. I'm a little jealous. Nonetheless, appreciate you guys following along. We will crank out another one tomorrow. Probably blockchain banter tomorrow with Jen and Dr. Mark Richardson. So be sure and tune in for that. If for some reason that doesn't happen, I'll do my own analysis here for you guys. All right, guys. And with that, we can go ahead and cap. Oh, I was gonna try and cap it. Lucas asking, is this a liquidation heat maps? These are not liquidation heat maps. These are spot order book heat maps. This is actually liquidity. These are limit orders resting in the order book. And these down below, this is a binned CVD showing you order flow by order class, with whales being the larger order classes and minnows being the smaller ones. You know, these yellow orders are the smallest order class here. And those are the only ones that are really buying with any volume at the moment. Maybe we'll get these other order classes to come in. Green's actually coming in a little bit. Now red is coming in a little bit too. See, we're getting into some liquidity here. So maybe they'll start buying into this, and then we can start working on this. But let's see if these start stair-stepping back up. That's what we want to see, and see price recover. All right, guys, with that, I will wrap it, and we will see you again tomorrow. Have a great evening. Don't panic here. You see the levels. Manage your risk. Don't get wrecked. Be very careful with leverage. But there might be some opportunities here. I would just, personally, if you haven't bought in yet, maybe you want to wait and see for buying to continue a little bit more with a little more volume, or a lot more volume, I should say. But I have added to my position here at this level because I had limit orders resting on those key levels. So I'm doing that. Lucas just subscribed. Awesome. Thanks, man. I appreciate that. We look forward to engaging with you in the community. And for anybody who hasn't joined us there, man, the Telegram communities have been lit. Check them out. We have links. I've got links in the description here on YouTube. And also, if you can log back onto X today, there is a link to the Telegram community in the material indicators profile at mi_algos on X, formerly known as Twitter. All right, guys, have a good one.